Alright, so we're going to go more into Netflix. But before I say anything, I'm going to go ahead and say that I'm not a financial advisor. This video is strictly for educational purposes. So if you do decide to purchase a stock or trade it or whatever, it is totally up to you. But yeah, overall, if those who know me on Facebook, Instagram, whatever, I trade cryptocurrencies, stocks. Well, I don't trade stocks, but I purchase stocks and I trade currencies. But based on the analysis that I see, I'll start with that trend. We'll fix it as we go to a lower time frame. But to me, dropping it down, from what I saw, it looks like that could be a double top. So an M pattern. But at the same time, what I like to look for are gaps. But knowing the gaps are available, based on what I saw earlier, I saw there were, for example, a gap right at the $64 mark. But in thinking on it, the business is doing so great that and gaps don't always fill. I mean, we don't want to just choose any gap, but we want to make a smart estimation as well, as far as when to actually buy. So if it did get that low, hey, maybe that's good, but at the same time, maybe that company's in trouble or something. But if you looked at the information on the company, like did some research on who Netflix is, the money that they're bringing in, or the services they provide, if you know anything about Netflix, they should be making great profits. And that's what they've been doing. They've been pretty consistent about the profits. So, but at the same time, that doesn't determine if the market's going to rise and fall, because the market does have to fluctuate at some point. Like, you're looking at it now. Green, up, red, it's going down, up, down, up. It doesn't just go in a straight line all the time. You can't expect it to all the time. At some point, there is going to be a correction. This is like 1, 2, 3, 4, 5, 6 weeks of drop, and it came up and it dropped for a couple months actually. It's probably scared some people out of their own stock because they don't know how to actually view this stuff on the other side, like you're doing right now. So being able to look at charts, it can be helpful in aiding your investment idea, especially if you're an independent trader or independent stockholder. You don't like rely on the dependence of a financial advisor, but they're not totally necessary in my opinion, but you can if you want to. Or you can just learn it on your own. So that's a spot that you can actually look at. That's a spot, and especially seeing that that's a double top. Let me go to a daily. You see all those gaps better now. So why are you doing that? I'm just going to draw it like that. Whatever. But seeing that wedge and an M pattern, it's falling. And it's probably going to come here first to fill out those gaps. You can use this at the spot to actually make a purchase, or if you're skilled enough, you can trade it. But personally, I don't even trade stocks like that. I prefer currencies, but Trade what you wish. Money is money. And you don't have to leave money on the table. And yeah, there is potential. From my perspective, I see potential in it actually falling to that point. And just thinking on it, there's talks of recessions. I mean, Bloomberg has been posting all about it all year. And closer to summer, it's summer now, summer 19 at this point. And at this point, they're speaking more about it. So from that news, it makes me think that they want to tank the markets now. So with them talking recession, and if it does happen in 2020, it could probably start tanking early during the summer and then just continue on during that year, maybe the entire year. So maybe it can hit that low of 66. I don't know. I really can't say. But all I can talk about is potential at this point. So we know there's going to be corrections, fake outs and everything, but it can, 200 can be good, 129 can be great as well, and 66, hey, that could be an even better entry point. I'm not saying that it will or anything, but overall, that's what you're looking at. But at the same time, just because the stock is dropping doesn't mean it's not making money, because yes, it's dropping a little bit right now, but we can go to investing.com and look at the financials now. And yeah, July 19. But what happened in March, it made more than expected, but here are the forecasts. Expected forecasts and the revenue that actually came in. So that's April. July hasn't released yet because it's still July. April. It made a little bit more than expected, barely. It reached its cap. So it's actually making money. It barely went under a few times, but they're making a lot of money. They're knee deep in profit. Just because it's in the red doesn't mean that they're negative. Expect a negative number if they're not doing anything. But overall, you see that they're making money. They're doing well. But selling isn't bad if you can actually make a profit off of it. You can probably make a profit off of just trading it if you wanted to, and then reap those benefits on both sides. But that's if you develop those type of skills as well. But if you want to learn a little bit more about trading, feel free to subscribe to my channel. I'll put a few videos in the description as well. And if you found this video pretty much helpful, feel free to give it a like as well. And if you have any ideas as far as where you think Netflix is going yourself, go ahead and comment as well. And subscribe to this channel if you feel like you want to learn more. Anyways, have a good one.